Hello everyone. So I thought that I would make a video as to what's happening to the economy and show how the coronavirus is affecting the economy. We are all facing the brunt of the same. Uh, it's unprecedented. It's a natural calamity. Everything is closed. The schools, the colleges, the government offices, the malls, the movie theaters, even the parks, the gyms, everything. It's unlike anything that I have seen or heard of before. And I thought that people should know what it means and what's happening. So let's first see uh, the news. So our stock market is falling. They are in bearish mode. Like it's expected that they are going to continue to fall, and to improve the same, the government has introduced various measures. Various governments worldwide have introduced these measures. So let me explain to you the effect of the same. Now, U.S. Federal Reserve cuts rates to zero and launches massive 700 billion quantitative easing. So, what this and I'll explain to you what this means. But see, the Bank of Japan is buying risky ETFs. South Korea Central Bank takes policy rate below 1% for first time, and RBI has infused 1 lakh crore rupees to support the the economy, and they'll be lending this money at 5.15%. So let me explain to you what this is. Let me draw it out for you. So there is this central bank. It issues the banks like say SBI, RBI, sorry, not RBI, it's SBI or ICICI, Axis, or any other bank the money at a rate of 5.15%. It has reduced considerably. And why would they reduce it? Okay, and so that these banks can give money forward to us. So think about it. It means that government is trying to encourage spending. And I agree with that. When the stock market is falling, the government must encourage funding to boost the economy. We'll talk about it right now. If the interest rates are high, and if you deposit money in sovereign bonds or like in your savings account, you get good interest rates, say 8 or 9%. It means that government is trying to incentivize you to spend the money. So if I'm getting 8 or 9% by just putting my money in a bank account, I'll be happy with it. And if uh, I'm getting a loan at a rate of say 11 or 12%, I won't want to take that loan. I would just I just won't be able to take loan. But what does this zero interest rate signify then? It means that US Federal Reserve is going to lend money to certain US banks at 0% interest rate, and it's unprecedented. It has never happened before. It means that US government is basically giving money for free to its bank, so that they can just give out the money to customers at very low interest rates or maybe negligible interest rates. It means that they want to they want customers to spend the money. Same is with RBI, 5.15%. It is very low in Indian standard. I haven't seen rates like this like ever. But what is the problem? Even if I take this loan at say maybe a little over 5.15%, but just for the argument's sake at say 5.15% only, where do I spend it today? Everything has altered. I can't start some new business because the people are just not purchasing. They don't have that kind of liquidity. So government step is totally correct, but this is unprecedented, and that's why I don't believe that this is going to correct the market in the long run. So basically, when a situation like this happens, so the demand for things has not reduced. I still want to go spend my money on movies. I want to go to restaurants. But when in scenarios like these, where the demand remains constant and supply falls, what happens? So this is my demand. Demand is like constant or maybe increasing. This is demand, and my supply. Normally, there new competition would enter, and they'll try to increase the supply. But this it cannot happen because people are not ready to leave their houses. They are trying to quarantine themselves. That's why supply is going down. Even and unlike 2008, there is no remedy. So even if government wants to inject more and more and more money at low interest rates, where am I going to spend it? Why would I take the money which I can't spend and still have to pay interest on it? So even the supply is decreasing, demand is increasing. People will lose their jobs. So even projects that a total 24 million people are going to lose their jobs, and it's an unprecedented number, and it's going to cause a lot of grief in the financial markets. Yeah, and it means people will have less money to spend. So people will have less money to spend. This would mean that it would cause deflation, and if there is a prolonged deflation, it means the global GDP would be affected and it would decrease. The problem is, I came across a lot of articles which talked about that echoes of 1929 can be heard in this particular scenario. The pace at which these global financial markets are falling, it's just incredulous. People are saying they haven't seen anything like this before, and they are just grieving. People are not even able to pay their rents. So it means that prices of property are going to go down. The worst hasn't begun yet. The worst will start as soon as people realize that government scheme would not be working. So if GDP is going to be low, what do you think are the consequences? If it's for 2 cycles, then it's termed a recession. If it's for more than 2 cycles, are we heading towards depression? That's a question that I leave to you, and I just thought that I would explain what this is. Thank you. Hi, let me add a little bit to my scenario analysis right now. So we talked about deflation, but what happens if the economy is crashing and it's not showing any improvement, and the government is increasing their funding, they are introducing more and more and more money, but it's not showing any results. So there is more money inside the system, that's for sure. But what does more money mean? It means inflation. Now there would be inflation when there would be inflation when the salaries or the people won't have money. So people won't have money. Their money is going down and down. Their liquidity is suffering. They are going to lose a lot of jobs. What would this do? It would make the matters worse. It would, I don't know how else to put it, but think about it. If the price of the bread that you buy is continuously increasing and you have less and lesser and lesser and lesser money to spend, it's going to make matters worse. So this has worked out in the past, and we have learned from before that injecting money into the economy is a very good thing, but I don't know whether this would work in this particular this strategy would work in this particular scenario or not. It might end up working, but it might end up backfiring. We don't know what's going to happen, and we have to wait and watch. But this eh, the month of March, like it's almost over, but still March and April are crucial for India. Let's see where we are headed. I hope it helped.